welcome to Solidarity Spotlight, the place where we share with you bleeding-edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. Toncoin's ambitious growth trajectory. A story generating significant buzz today revolves around Toncoin, a blockchain tied to Telegram's 900 million user ecosystem. Analysts like MEXC's Tracy Jin suggest it could become the world's largest blockchain by 2027 due to its seamless integration with Web 2 platforms. By offering native wallet functionality and partnerships with decentralized applications across dating, gaming, and finance, Toncoin leverages Telegram's established user base. A meme coin project called Snorter Token has emerged as a beneficiary of this ecosystem, highlighting the potential for speculative assets to thrive within such networks. The implications are profound. Telegram's infrastructure brings scalability and user adoption that pure-play crypto projects struggle to match, positioning Toncoin for rapid growth in Web3 integration and microtransactions. Regulatory clarity fuels new crypto ventures. The Trump administration's crypto policy report released today clarifies oversight between the SEC and CFTC while emphasizing stablecoin adoption. This regulatory framework has greenlit projects like Bitcoin Hyper and Best Wallet Token. Bitcoin Hyper, a Solana-based Layer 2 solution, addresses Bitcoin's scalability issues with sub-second transactions and zero gas fees. Best Wallet Token, meanwhile, integrates multi-chain trading tools into its platform, reducing costs for retail investors. These projects capitalize on newfound clarity, suggesting a boom in infrastructure-focused tokens as institutions seek compliant avenues for market entry. The report's emphasis on innovation could drive institutional capital toward tokens offering real-world utility rather than pure speculation. Grayscale expands into intellectual property tokens. Grayscale's new Story Trust focuses on IP, a token enabling programmable digital rights for intellectual property. This innovation transforms media, biometric data, and AI training sets into on-chain assets with self-enforcing smart contracts. By eliminating intermediaries, Stellar IP could revolutionize content licensing, enabling artists to embed royalty rules directly into tracks or companies to enforce usage rights for AI models. Grayscale's involvement signals institutional confidence in IP tokenization, positioning it as a bridge between traditional creative industries and decentralized technologies. The trust's launch coincides with IP's 100% monthly price surge, reflecting market anticipation for this emerging niche. Naoris Protocol enters mainstream with TGE. Naoris Protocol, a quantum-resistant blockchain, launched its token $Naoris today. Designed for Web3 security, it uses a decentralized trust mesh where nodes earn rewards based on reliability. The token will trade on Binance and Gate.io with a fully diluted valuation of $500 million. Thus structuring, the protocol could disrupt cybersecurity by automating trust validations without human intervention. Its utility in securing cross-chain interactions positions Naoris to capture demand for resilient infrastructure as quantum threats loom. The high circulating supply and exchange listings suggest a strategic push for liquidity, potentially attracting short-term traders alongside long-term holders. NFT market consolidates at new heights. NFT sales reached $574 million in July, the second highest monthly total in 2025. While transaction volume dipped, the average sale price surged to $113, a 6-month high, indicating a shift toward high-value assets. Ethereum-based collections dominate, with CryptoPunks and Pudgy Penguins leading. Pudgy Penguins saw a 65% floor price increase, outpacing blue-chip assets. This trend suggests market maturation, with institutional buyers acquiring rare digital artworks or virtual land. However, Polygon and BNB Chain saw sales decline, revealing blockchain-specific risks. The rise of Ethereum's ecosystem, driven by its token price and developer activity, underscores a Ethereum season narrative that could amplify altcoin growth as capital rotates from Bitcoin. Institutional crypto holdings expand. Phoenix Group, a Bitcoin miner, revealed a $150 million treasury, including 515 BTC and 630,000 SOL. This marks the first Abu Dhabi Securities Exchange-listed company to hold crypto assets on its balance sheet. The strategy reflects confidence in Bitcoin and Solana's long-term value, particularly as Solana's price recovers. Such corporate adoption could legitimize crypto as a reserve asset, mirroring MicroStrategy's Bitcoin strategy but extended to altcoins. The move may spark a trend among mining firms, especially with Solana's high-throughput infrastructure appealing to enterprises. Tether-focused stablecoin network gains momentum. Stable, a blockchain built around Tether's USDT, raised $28 million to enable fast, low-cost payments. By using USDT as gas, it aims to overhaul traditional payment systems with sub-second settlements. Backed by Bitfinex and Franklin Templeton, the project targets emerging markets struggling with slow banking rails. Stable joins Plasma, another stablecoin-focused network, in addressing DeFi's liquidity needs. The funding influx highlights institutional appetite for infrastructure solving real-world problems, positioning Stable as a competitor to established payment processors. Hong Kong's stablecoin regulatory framework. Hong Kong implemented its stablecoins ordinance today, requiring fiat-backed tokens to obtain licenses. The framework includes a 6-month transition period for existing issuers and strict Know Your Customer (KYC) requirements. While no licenses have been granted yet, the move positions Hong Kong as a regulated crypto hub. The public registry for licensed issuers and penalties for false claims aim to enhance transparency. This could foster institutional trust, drawing stablecoin issuers seeking compliant operations. However, high compliance costs may filter out smaller players, concentrating market power among established firms. Ethereum dApp activity approaches new peaks. Ethereum's dApp usage may surpass 2024 levels driven by DeFi, NFTs, and Layer 2 adoption. Over 234 million unique wallets interact with Ethereum-based apps, with DeFi accounting for most transactions. Institutional adoption is rising, with 2.73 million ETH held in corporate treasuries, a sign of long-term confidence. The network's dominance in complex smart contracts and cross-chain interoperability solutions reinforces its position as Web3's backbone. However, competition from Solana and Polygon may pressure valuations as developers seek cheaper alternatives. Bolivia and El Salvador deepen crypto ties. Bolivia signed a crypto collaboration agreement with El Salvador, leveraging the latter's Bitcoin legal tender experience. The partnership aims to modernize Bolivia's financial systems with virtual assets used for cross-border payments. Bolivia's crypto transaction volume surged 532% post-regulatory changes, signaling grassroots adoption. El Salvador's regulatory expertise, despite IMF restrictions, could help Bolivia navigate policy frameworks. This alliance may encourage other Latin American nations to explore crypto as a dollar-equivalent reserve, fostering regional adoption and reducing U.S. currency dependency. Fed policy sparks market reaction. The Federal Reserve maintained interest rates, resisting Trump's calls for cuts. Bitcoin dipped initially but recovered to $118,533, reflecting resilience. Analysts note 2 Trump-appointed Fed members dissented, signaling potential future rate cuts. Bitcoin whales continue accumulating, with the number of entities holding 1,000 plus BTC reaching a year high. This suggests institutional hedging against inflationary risks, positioning Bitcoin as a store of value. The split within the Fed and geopolitical tensions underpin the market's cautious optimism, with Ethereum and altcoins likely to benefit from shifting risk appetite. Closing thoughts. Today's stories reveal a blockchain landscape where regulatory clarity, institutional adoption, and technological innovation intersect. From Toncoin's Web 2 integration to Grayscale's IP tokenization, these developments signal a maturing industry focused on real-world utility. NFT consolidation and crypto treasuries highlight shifting capital flows, while geopolitical partnerships like Bolivia-El Salvador demonstrate crypto's role in economic modernization. As markets navigate macroeconomic uncertainties, the emphasis on infrastructure and compliance will likely define the next phase of growth. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.